Hi guys, good day to you once again. I'm Abiola. Today we are starting the very first topic in account that we'll go through in the course of AS, A-level and O-level account. Okay, it's a system that explains transactions in dual ways. That every transaction in accounting has two entries to be made. Transaction means movement or transfer of goods or items, even money, from one end to the other end. That means basically when a business sells goods to another business or to another individual, that is a transaction. When that individual pays up for the transaction, that's another transaction. Payment could be made immediately for transactions. Payments might be made later. But every time goods or money or items move one end to the other end, there is a transaction. And every transaction has two parties that are involved. One party is giving in that transaction and the other party is receiving. For instance, in the earlier example that I said, if a business sells goods to an individual or to another business, the business selling good, let's call it business A, is the giver of goods in that situation. Then the individual that receives the goods, or the firm that receives the goods, let's say firm B, is the receiver. And there is double entry principle that says that for every giver in the transaction, there is a receiver. Okay, if I give with right hand, that means I receive with left hand, basically. The giving side in account is the credit side. The receiving side is the debit side. Debit denotes the side that receives in the transaction. Credit, which is the right hand side, is the side that gives in the transaction. Hence, in the transaction, firm A sold goods on credit to firm. In this, firm A gives goods of 500 worth, and the side that gives is the credit. That means we will record that transaction in the credit side, but it was given to firm B. That means this will be firm A's account. Firm A is given. Since it is given, it is sales account, and it was sold to firm B. Firm B receives the goods. That means we have to open an account. This T is open for firm B that received in that transaction. But because firm B receives the goods, that means firm B side will be in the debit, and it was through sales. If we critically look at what was done, two accounts were opened for a single transaction. One side gives in that transaction, goods of the business were given out through sales, and it was recorded in the credit side. The amount was recorded in the credit side, and firm B was the receiver. In the other account, the left side was for the debit, which means firm B receives in that transaction. That's for example 1. Example 2, however, firm B returns. It is possible, however, when goods are sold to our customers or a firm's customers, Some might not be in good condition. Some might not be the pattern or color or the package that the customer had ordered. Or some might be more than what the customer ordered. Hence, there might be need sometimes for our customers or customers of a firm to return goods. When customers return goods, that is to mean another transaction entirely. And if in the next example, firm B, the purchasing firm, returns goods of $100 to firm A, because goods were returned by firm B, in this transaction, firm B is the one giving out goods. The business is receiving returned goods. Hence, the two accounts we will open will be returns account and firm A's account. Because firm B returned goods of 100 to firm A. So firm A is to be opened and returns account is to be opened. But if the transaction is recorded in the books of firm B, we started with a firm A selling goods to firm A. Firm B is now returning the goods, which is another transaction. Returns account, as was said earlier, would be opened. And the firm returning the goods will be opened. So in firm A's account, firm B is the giver. And returns account. But because firm A is receiving goods, that is called returns inwards. Goods that were sold out before are being returned in because of several reasons, which would be spoilage, goods more than or not in good condition. For several other reasons, goods may be returned. And since they are returned to firm A, it is returns inwards. So, firm B is given. That means we will record in the credit side for firm B the amount of goods returned. Returns inward means the goods are coming into the business. So it is to be recorded in the debit side. Note again, debit side is the left side. Debit side is to mean left side, then credit side is right hand side. So the side that gives is the one in the credit side. The side that receives is recorded in the debit side. So in the second transaction, where firm B returns goods to firm A, firm B is the one giving out. So we write the amount in the credit side, in the right hand side. The goods are being returned in to the business. That means returns inwards account will be recorded in the debit side, the left hand side, because goods are being received into the business. And in these two transactions, when two accounts are affected, the first account will be the detail in the other account. That means the detail here will be firm B. And the detail here will be this account, returns inward account. Let's attempt one more question together before. Okay. Number 3. The business took loan of $1,000 from ABC Loans. If we look at it, money is coming into the business now in form of loan. That means cash account would be affected. Then loans account, ABC loans. Why? Money comes in as a result of the loan. So that an ABC loans is giving out the loans. That means ABC loans is the giver in this transaction. So ABC, the amount will be recorded for ABC in the credit side, the right hand side. Then the amount will be recorded for cash in the debit side because cash of 1,000 was received. And the detail will be in cash account, ABC loans will be the details. And in ABC loans account, cash account will be the details.